But are you in consensus with that the market is likely to remain directionless until earnings reports start to filter through?
Alishia, I think that's actually absolutely true. The market at this point in time isn't exactly being driven by any clear fundamentals, and that will continue to drive the market going forward. The key issues right now, people are looking out for 2010 numbers and a bit of guidance as to what to expect in 2011 across sectors. Now, if you look at the sort of guidance that we've seen from some of the large banks, UBA and to a lesser extent FCMB, they give you the impression that the strong recovery that we're expecting in earnings isn't likely to happen in some of these banks. So which means that market will continue to look for historical information as to how 2010 panned out to drive numbers going forward.
When it comes to sectors that are looking interesting at the moment, the pharmaceutical space crops up. It's traditionally a sector that is viewed as defensive in any case. So what's your overall view on the sector before we drill down into specifics? Because we have seen quite a bit of activity over the recent past within this sector.
Very, very true. I would actually put within that bracket not just the pharmaceuticals, a bit more of the non-industrial FMCGs. The reality is that as we continue to see strong economic performance from Nigeria, companies like pharmaceuticals should ideally, even in a downturn, continue to buck the trend. The pharmaceutical sector in Nigeria still struggles, however. A couple of issues have come up in the last couple of years. One being the cost of imported raw materials, which has been a major problem for the industry. The level of R&D as well that is supposed to go into, new drug production and all of that hasn't exactly happened. However, there are still some individual players in the sector that have shown very strong performance. Companies like GSK, companies like Fitsin, Nemeth have had very strong performance since 2010, and we expect that to continue. However, on the profitability end, I think a lot of it is going to be driven by the level of increase in production that these companies are able to ramp up as quickly as possible. Capacity utilization continues to remain a challenge for a lot of people because, the actual cost of production has been impacted both by imported inflation as well as operational challenges for these companies. And I think that's going to be very important in how the sector pans out.
Let's drill down into a few of these players, though. GlaxoSmithKline is one of the companies you've touched on. It's the big one in the sector. It's boasted strong and steady growth, in its numbers. It's got to be holding it in good stead already, where the market is looking like things are only going to be getting better from here on out, given the way it's weathered a downturn.
Well, GSK is an interesting play. I think GSK is struggling in 2011 simply because in 2010 it was one of the stronger players. But from an earnings point of view, like you rightly said, it still continues to provide a strong underlying earnings growth. Now, perhaps what is working perfectly for GSK, it's not just a drug company. It's also got forays into the sports liquids and a bit of consumer goods as well. Its Ribena products and Lucozade products are still very strong players in the market. And we've seen the introduction of new products into the market that have done very well. So I think GSK is always going to be a very strong play. If you're looking at the pharmaceutical or the FMCG sector, then GSK will be one of the counters that you would be focusing attention on. However, the key for GSK is also product introduction, the ability to continue to introduce new product that can compete with the established players like your UAC and your PZ will be very key in GSK continuing to deliver value to its stakeholders.
Fitsin Pharmaceuticals, though, is an interesting play in itself. This is a player that is in the business of generics, and that counting in its favor, one would assume, where we've got consumers becoming a little bit more cost conscious. Well, that's certainly the trend here in South Africa.
Well, I could assure you that the same trend is actually happening in Nigeria. People generally would prefer cheaper generics to the real deal, if I could describe it as that. However, Fitsin situation is actually more interesting. In the last year and a half, 2 years, the company has decided to also start to grow its consumer products section of its business, and you've seen quite a lot of investment going into that. They've also benefited from the pharmaceutical fund that was released to the Bank of Industry, meaning that they've been able to bring down their cost of funding. Now, what is key for FITSIN going forward is turnover growth was very benign in 2010, just about 5%, thereabouts. It's important that they continue to grow, especially the consumer products business, because that's where they have higher margins and there's probably significant opportunity for them to grow. However, what will be key for them as well will be the ability to continue to improve on capacity utilization and bring down the general cost of running the business. Fixing the power sector still becomes very important for the pharmaceutical sector as well. And that's something that we'll continue to put our eye on.
Taking a look at something like Nimbus, I mean, it used to be Pfizer, and it's interesting to see how it's keeping up. I mean, how has that new look business been keeping up against the other two contenders in that space? Because it is now a local operation, and it is also a strong player within that generics business component as well.
True. Nimbus has a particularly sorry story to it, and the reason being that Nimbus hasn't been able to grow the business aggressively, even without the Pfizer brand. And that gives quite a bit of cause for concern. The business is actually loss-making in 2010, and there are strong indications that that might continue. And a lot of it is actually both operational as well as funding costs. Nimbus has a very high operational leverage, as well as financial leverage. Both of them are quite high. And that means that in a strong competitive environment like you have in the pharmaceutical space in Nigeria, then companies like Nimbus will struggle. What is key for Nimbus is to perhaps start to look at additional business lines that can complement the food and the drug business. And I think that will be key for them surviving the sort of operational environment that we have. If you look at the performance when Pfizer was still the major investor in that company and the performance today, you've seen some form of consistent deterioration in the numbers. And I think that is driven more from the financial leverage position of the company. Hopefully they will be able to access some form of cheap funding from the government to be able to bring down that cost and then focus on research and development towards developing their business.
Femi, there are variables to take into consideration that aren't necessarily in industry hands. So beyond the companies themselves' abilities to control, the power situation in the country is one of them. What kind of challenge does that present, and what kind of element of risk for an investor who's wanting to delve into this space?
It is a major problem, and not just for the pharmaceutical sector, but for the industrials as a whole. Diesel prices, for example, are up about 40% in the last 6 months. That's significant for anyone who's running generators from a production point of view, when a key cost component has actually gone up by 40%. If you now add that to the weakness of the naira, as well as the challenges when it comes to importing products and the issues with the ports, you see almost like a conglomeration of major risk elements that people need to take into consideration. However, the key for me is if you're able to continue to innovate in that sector and continue to produce at a lower cost average relative to the rest of the industry, then you've got an advantage. And that is what players like GlaxoSmithKline and FITSIN are able to do, given the current environment. And that will be key going forward. Now, we expect that the power situation might improve significantly within the next 12 to 24 months. Now, the truth is that we've been expecting that for 10 years. However, if that improves, and people are also able to convert their production facilities from diesel to some level of either gas or black oil, then that could bring down your average cost of production. And in an inelastic market like Nigeria, then it means that you cannot continue to keep your margins high.